as always, we're going to start doing the trying to identify the strength and weakness and see what happened during the last week. And the last week has been quite an interesting week. We have the issues with Ireland. We have the issues with the U.S. Budget and the debt ceiling that they have, and we will be able to see those repercussions of these two events on the markets, and it will allow us to plan the trades for next week. So, of course, everything that we have heard about the dollar all of the last week with regards to the deficit and the debt ceiling is quite negative, and we also heard some of the events that is going on in Ireland and in Portugal, again, which should be expectedly negative for the euro. I'm just giving you this fundamental background so that we can see how we're going to what we'd expect to see on the charts. The pound there was not really much of any news going in any side as far as the pounds was more or less kind of a neutral. So with that in mind, if we go to the indices, and if you look at the dollar index, now knowing that all the events that took place, you can see that on the week, last week, the dollar closed at 75.02, and that close is the lowest close for the US dollar in history. The US dollar has never closed that low before, and it has actually put a low of 74.82, which again is the lowest price it traded, and you can see that it is quite negative. So looking at the dollar on a weekly base, and if you look at the chart, I mean, it is really a sad sight. But it seems that what we are seeing in the dollar here is what appears to be some sort of a concerted effort, or that the US government is actually quite comfortable with the level that the dollar is trading at, because if you look at the indices, if you look for example at the S&P, the S&P now, which is the index, is actually closed the week at 1,318, which is only 50 points from the structural breakdown of 2008. The structural breakdown of 2008 was 113.68 or 113.60s, and we closed this week at 113.18. That means that there is a big, I mean, it made back all the losses, all the so-called bear market of 2008. We are back, we're 50 points from break even, which of course for the US economy is fantastic, because now the wealth, if you will, or the net worth of everybody that owns stocks at that time is coming back to where it was in 2008, and that is very positive for the psyche of the American consumer, and that will allow the consumer to begin to have the disposable income, and would start revitalizing the economy. So they seem to be quite happy with that, and of course this kind of move will translate itself in company profits and in exports and in cash flow, incoming cash flow into the US, into the United States. So it seems that that level in the decline in the dollar is not really bothering the US government, if you will. Looking at the other currency, which is the euro, again the same situation with the euro. Versus all the negativity that we have breaking above the structural point, which is the 142 based on the index, the 142.47 based on the index from last week. This week we have closed the week at 144.16, so that is again quite a very strong close for the euro, and we should expect continuation to the upside. This close, even though it might be a minor, on a weekly base, might be considered as a minor sell signal, but it is not really a something that will allow us to turn bearish on it. But it might give us an opportunity now to look at any decline that's coming in as a buying opportunity. If you look now at the last week, as you see here, I mean this is the daily chart, this is the weekly chart, so you can see this is the week, that is the week. It's kind of a neutral week. If we break it down on a daily chart, you can see that the last 5 days were pretty much inside the range of the last 5 days. So in essence it is quite a neutral day, a neutral week, and of course with this trend that is going up, our bias should continue to the upside. We really do not have any reason to turn bearish on the euro. Rather we need to be looking at further continuation and the breakout. Now the breakout point for the index, the euro index, is the 145, which is about 75 pips away based on the index. If you look at the British pound, that again is kind of a neutral, if you will. It is not, it's again the close of the week is 162.94 or 163. We are above that minor structure point, which is the 162.50. So we closed the week at 162.94, so that is pretty positive. There is no momentum in the pound, if you will. It has been moving sideways right now for quite some time. It's been moving sideways for quite some time. I mean, if you look at it, that high was set up in November of last year. So from November last year up till now, we are really have gone nowhere with regards to the pound, but it is neutral to positive, so we are not going to be looking at selling it unless it trades below the 162.47 as far as the index goes. So the pound is kind of neutral, if you will. The euro is strong and the dollar is so far weak. And if we look now at the Aussie, this is in a stratosphere by its own. I mean, this is the weekly close. This is the highest it has closed in history. This is all-time historical high, and the dollar now is all-time historical low. So just looking at those two, you want to be selling the dollar and buying the Aussie. I mean, it's just seems to be a no-brainer, and since it's so obvious, we have to be quite careful about it. But Yeah, definitely that is the case. The Australian, as I said, is the high of the last month, or this month if you will, is the 105.04. It has closed the month at 104.94, so it's 5 ticks right from the all-time high. This is an extremely strong close. I mean, that is a very powerful looking chart. And as you can see, we had only one down day last week, and which was on the 12th, and the market just turned around and had a steady 3 positive days. If we go to I'm keeping the yen to the end. If we look at the Swiss, again, it's pretty much the same as the Australian dollar. It is near an all-time high with regards to the US dollar. The dollar has never been as low as this, as it is right now with regards to the Swiss. There is no reason for us whatsoever to be looking at shorting the Swiss, at least in the short term, and we should be looking for a continuation to the upside. And last but not least is the Japanese yen. And this is quite interesting. I mean, this is and that's the reason I left this chart to the end, because what you see here is quite an interesting setup. We have two structural points, if you will, and they're pretty close to each other. They are about 100 pips away from one another. One is at 119.43, the other is at 118.45. So ballpark, the difference between those 2 points is 100 pips. We have broken the first structure 2 weeks ago, and at the same week we tested the second structure, which is the 118.45. We broke below it and we made a low of 116.97, and then last week we just turned back around, came back above the 118.45, back above the 119.43, and we closed the week at the 120 level for the Japanese yen. Now, this gives us the question, I mean, how are we going to be trading the yen with this? I mean, we do have a major sell signal, which is this one, followed by the breakdown of two structures. We have a failure to continue to go down, and then we have a reversal now, and we closed at the 120.33. If I look at this and I look at the Australian dollar, and I look at the Swiss franc, yes, the Australian dollar does look the strongest. The Swiss franc does look extremely strong, but, and this is where we have to all be careful now, this kind of failure, the failure to act as per our expectation. The failure to capitulate to the downside could be a sign that we may get some serious short covering move to the upside in the yen. So it's not particularly a trend change. The trend change in the yen would be back up around the 124.75. Right now this is a failure below a structure, so we should be looking at buying the yen. I mean, if the strongest buy signal, this is a definite buy signal. The Aussie is a continuation to the upside. The trend is going up and it's moving higher, so I'm looking at continuing my buy. The same thing with the Swiss. The euro, it's kind of neutral. It's not, yes, it's going up, but it's inside the previous week, so it is kind of a neutral. The pound, as we have discussed, is basically weak. It's not really giving us neither a buy nor a sell. It's in a wide trading range. The only outright buy signal that we have is the yen. Now, having said that, this means that we will be looking at finding opportunities to buy the yen, yet since we have those major structural failures, I will be very tight with my stops on the long position on the yen, and if it fails and it turns around below one of my structures, I will immediately reverse and take it short. Right now it has turned bearish on the yen, but we may have some short covering, so we will buy it just to take the short covering. But if it fails and it comes down below the structure points, then we are going to be sellers. Also, if we look at what's happening in the metals, interestingly enough, you would see that the gold is practically at an all-time high, closing the week as based on the index, the continuous contract at 1,486, which should be very supportive for the Swiss franc and supportive for the Australian dollar and supportive for the Canadian. If you look at the silver, I mean, this is again historical high. I mean, it has never been traded at $42 until back in the 80s when they had the Hunt brothers, when they were cornering the market. And I think I don't have the data, but it has never been there. I mean, the last time silver has ever seen anything close to $50 is when there was one of the biggest market manipulation in the 80s, which is called the Hunt brothers, and ever since it has never been there. This is like a 30-40 year kind of a move. So, and the reason we have this kind of move is that because the ounce of silver is $42 versus an ounce of gold which is trading at 1,400, and therefore it is much more easier, it's much more cheaper for the individual to actually buy an ounce of silver and use it as a hedge for his currency or whatever, and by doing so, because of the price of silver is much less than the price of gold, there is an additional demand coming into the silver, and therefore you'd see that the big move. So, and this again is also would be supportive to the Aussie and the Swiss. The one concern that I have is copper. this just turned around, and that is technically or shouldn't be supportive for the Australian dollar, and that is actually a big sell signal for the copper. I mean, any trade below the 21 $4.21. I mean, that is going to be quite bearish. Last but not least is the crude oil. And you can see that again it has broken up to the upside. But for the last 2 weeks or so, or for the last week or so, we had a reversal week last week. So far this is the closing at the 110. That is a buy signal in crude, which would be supportive for the Canadian and would be negative for the US dollar. So just to sum it up and wrap what we're doing here, or what we should be looking at, we would be looking primarily, or I would be looking primarily at the yen. So I'll be looking at the yen as a primary buy, and this is because of short covering, not because of a trend change. I would be looking at the second one. I'll be looking at would be the Australian dollar as a buy. I would also be looking at the euro, and the Swiss. I mean, I'd be looking at the euro and the Swiss. So these, let's say the Swiss, these would be the ones I'd be looking at buying. My sellers, I would be looking at the US dollar, the one that's extremely weak is the US dollar, so that's primarily would be the one that I'll be looking at shorting it. And I would be looking at maybe in a kind of a neutral way, the less weaker is the British pound. So the weakest currency that we have this week is the US dollar, and that is established by the all-time high closing in the gold, the all-time high closing in the silver, the all-time high closing in the Australian dollar and in the Swiss franc. And it seems like it's such a clear picture for a clear case for the weakness of the Australian for the US dollar, and therefore when something is so obvious, when something one second, diggers, when something is so obvious, yes, we will go with it, but we are going to be cautious and making sure that our exits are precise, and we are going to keep our exits tight. Digger is asking about the New Zealand. If you look at this here, you can see that the Australian dollar is pretty much correlates pretty much the same as the New Zealand. So if you look here, you can technically say that the New Zealand is as strong as the US as the Australian dollar. And for example, Digger, if I'm going to put the New Zealand here. So if you want to look at which one you want to be selling, probably you will be doing this. You will be going long the New Zealand and short the pound. The CAD, the CAD is, again, I mean, the CAD is the CAD. The CAD is the loonie. I mean, it's supported. It looks okay. It is kind of neutral. I have to say it is. I mean, I don't know. A lot of people love to trade the CAD. I mean, it's not one of my favorite pairs, to be honest with you. I mean, look at this. It's like, but it's positive. You can be buying it. As far as I'm concerned, Carlos, is I want to see opportunity where I can buy and move. I mean, this just, but it's, again, it's a buy. I mean, let's be technical about it. This is a buy, and we need to be looking at buying it. But just to go back to Diggers, if you look now, remember we'll be looking at buying the New Zealand and selling the pound. That is the move, and that, based on that, you would have taken. That's it. I'm just showing you. That is the trade. You would have taken fantastic move in the last 4 days with the New Zealand pound. Okay, so let's save this